Hi guys, welcome back to my YouTube channel, and if you're new here, my name is Esther Moffrey. In today's video, I want to talk about golden cross trading strategy and how it can help you to improve your trading results. The first thing you need to understand is what is golden cross. Golden cross occurs when 50-day moving average crosses above 200-day moving average. And also, if you talk about golden cross, you will not fail to talk about death cross. So death cross occurs when 50-day moving average crosses below 200-day moving average. I'll show you pictures to understand what I mean when I say moving average, crossing above, crossing below, and you will be able to understand more. The second thing that you need to understand, what is the best time frame to use this golden cross strategy. Many traders have different preference, but I'll highly suggest if you are into trade, if you're just a beginner, kindly use 1 hour time frame, because if you go to use a daily chart, I'll even show you golden cross on daily chart. It is not a strategy to just enter a trade and take your profits in the same day. If you use daily chart, these are people who hold their trades in weeks, months. So the best time frame to use as a beginner is 1 hour time frame. And the last thing that you need to understand when you're using golden cross trading strategy is that whenever you see a ranging market, kindly avoid it, even if it has crossed over 200-day moving average, or it has crossed below 200-day moving average, but it's a ranging market. Kindly avoid that trade, because at the end of the day, ranging market can turn either way. So these are the rules. First of all, you need to understand what is golden cross. You need to understand where will I apply the golden cross, which is the best time frame, and what should I avoid in this strategy. So guys, let me show you the golden cross from the charts, from the real charts. So the first one, I will give you the golden cross chart. So the golden cross, as I have said, it occurs when the 50, this is our 50, in this case I'm using 50 exponential moving average. You can use 50 moving average, 50 simple moving average. It doesn't matter, whichever simple exponential just moving average provided is 50 and 200. So the black one is 50, the red one is 200. This is a 1 hour chart. So as you can see, our golden cross, it crossed around 23rd of March at 8 p.m. So when it crossed, all this should have been someone who knows the golden cross, and he was able, or they were able to identify this cross, and they were just waiting a pullback to the moving average so that they can get into the trade. This was a good trade to take, because this is not a ranging market. This is not a ranging market, is a trendy market. So you can see how this market continued, and when this golden cross occurs, it means that it is a long-term uptrend. So the reason why we want to understand our golden cross is because to give us confluence on other things that we use in the market to identify our trades. So this one can help you. So this is how the golden cross looks like. Let me now show you death cross. So guys, this is our example of death cross. This is Audi USD pair, and you can see whenever death cross occurred, when the 50-day moving average crossed below 200 moving average, the market really went down. This market really went down, and if we can only know how many pips are these, almost 186. Can you imagine 186 pips, just knowing that this death cross occurred, and then you wait for your market to just go and retest or do a pullback and now enter this place, knowing the market has done a death cross of 50-day moving average, crossing below 200 moving average. If you have never tried this, kindly try it and let me know what has happened. But before you try it on a live account, kindly test it out. So whenever death cross or golden cross occurs, you need to understand two things. Death cross brings a long-term downtrend. So as you can see, this is a huge downtrend. Even if the buyers were trying to pull the price to the 200 EMA, because in our case 200 EMA, 50 EMA react as a resistance. So even if buyers were able to bring the price up to 200 EMA, what happens? The price still is getting rejected and it is being pulled down again, and then the buyers still try to pull the market to the 200 EMA, which in our case is our resistance, and the sellers are trying to push the market away. But you can see here, as I was telling you, there's a possible golden cross, but the problem with this setup, it is a ranging market. This is something that I was telling you, avoid a ranging market. Yes, the golden cross has occurred, but this is a ranging market because the price is not it's not moving away from this box. So this is what I was saying. Even if the golden cross occurs, you need the price away. You see how the golden cross occurred, tested the market, and then it moved away. Here the golden cross has occurred, the price just reached the same place. It reached the same place, and now it's going back. So what you can do in this case, you can just identify your zones, and these are the zones, and then whenever this market move away from these zones, that's when you can look for a long term buy, long-term uptrend, and you can put your buys. But if the price will keep on it will keep on behaving like this, just in that range, avoid this setup. But AUD-USD is a pair that you can look for a strong uptrend because the golden has occurred, but we cannot put a buy yet because it is in a ranging market, and that's one of the things I told you, kindly avoid. So this is something that I want to show you that it really help, and I want now to give you the picture of golden cross on daily chart, both golden cross and death cross. So we start with the daily chart. Let's start with the daily chart. If I can just check at the time, the golden cross occurred last year, June 2020. Whenever this golden cross occurs in higher time frame, it gives buyers confident to understand the market and to know that this market is a long-term uptrend. You can see, yes, there were sellers trying to come in for weeks. There were sellers, but when buyers were coming in, they were pushing this market so high. So the first thing to understand is that when golden cross occurs, if you want a confirmation of where is the trend going. So in this case, golden cross occurred, 50 moving average went above 200 moving average, and this is a clear indication from last year 2020 on 19th of June up to today, the market has been uptrend. Have there been sellers? Yes. But who is more stronger in the market? Buyers. So if you are a short-term trader, you can now go to smaller time frame and try to look for buys opportunities. Now let me show you a death cross on a higher time frame of daily chart. This is our GBP AUD pair. So the death cross here in this case occurred last year again on 3rd June 2020. So the death cross occurred, and immediately sellers knew they are supported whenever they would sell this market. And it's better to know a long-term uptrend or a long-term downtrend, when you are a trader, you know which side to be on. So this strategy gives you the first confluence to be right on the market, because if you are wrong, if you come into this market and you start buying, this market sold for almost 1 month, because from 15 June all the way to July it was a sell. So even if buyers would come in, even if buyers would come in, the trend was downtrend. This is what I'm saying. The minute you see this ranging market, avoid this ranging market, and whenever the market now comes out from the ranging market, you can trade. But understand, this ranging market in a smaller time frame, there are some setups that you can trade also. So that's something that you need to understand. So this market has been downtrend according to the death cross. It has been downtrend, but it is almost crossing again. As you can see here, it is almost crossing to support a buy trend or a long-term uptrend. So GBP Australian dollar is one of the pairs that you can be looking for a long-term buy on the daily chart. But let's look on the 1 hour chart. What is the chart saying? Because you need to compare different time frames for you to know what is really happening. So when we go to our GBP on 1 hour, let's see what is really happening. Now things changes for GBP AUD, because we are in a smaller time frame of 1 hour. If we can try and see, we are almost having a death cross. Even when you see this kind of a market, it is going on a downtrend, and the support will be the cross of this death cross. So that's why I'm saying, when you use higher time frame and when you use low time frame, you may get different results. Choose lower time frame if you're not planning to hold your trades. So guys, this is one of the examples, and you can see where the golden cross has occurred. Buyers have been strong for a moment, because from 23rd of March all the way to 1st of April. So this is long term. It's like more than 2 weeks buyers have been in control. So guys, that's all I wanted to show you in this video about using the strategy of golden cross. And remember, you cannot use this strategy on its own. It needs confluence of many things. You need to understand different things that support your trade setup. So this one can give you a setup on a long-term buy, but when do you place that trade? Has it met your rules of trade? Has it met your confluences? You need to have like 3 or 4 confluences before you place a trade. So guys, thank you so much for watching. I hope this video was helpful, and I hope you will try the golden cross, the golden cross or the death cross strategy, to really understand where the market is going, to really understand which side is more stronger. And if you do that, you will improve your trading results. Thank you so much for watching. If you have not subscribed to my YouTube channel, kindly consider subscribing. Until next time, bye bye. Love you.